In this video, we take a detailed look at depreciation. We'll start with the basics, what depreciation is and why it's important. Then we'll look at how it works in Xero, and you'll see how to run depreciation on your fixed assets. Depreciation is how we account for assets getting older. It's the cost to your business of your fixed assets such as computers, motor vehicles and office equipment falling in value over time. Running depreciation helps keep your financial records accurate and can help you make better business decisions. Depreciation is important for both the balance sheet and the profit and loss or income statement. The depreciation charge is an expense in the profit and loss. It affects your profit. It also reduces the book value of your assets in the balance sheet, so it affects your financial position. Let's look at how we account for depreciation with a simple example. We buy a computer for $1,800. It will last for 3 years. For this example, we'll ignore any salvage or residual value. We'll write off the cost of the asset evenly over 3 years, so the depreciation charge will be $600 each year. When we buy the asset, the cost is included in the fixed assets number in the balance sheet. In the first year, the depreciation charge is $600, so the asset's book value in the balance sheet is now $1,200. The depreciation charge is shown as an expense in the profit and loss. At the end of year 2, the asset's value is down to $600, and by the end of year 3, the cost of buying that asset has been fully written off. This method of depreciation is called the straight line method. It's nice and simple because it results in the same amount of depreciation each year. In this example, the depreciation charge is 33 1/3% of the cost. Another common way to calculate depreciation is the declining balance method. It's sometimes called diminishing value or reducing balance. Here, depreciation is charged at a percentage of the asset's book value. Let's see how this works using that computer as an example. We'll use a declining balance depreciation rate of 40%. We purchased the computer for $1,800, so that's its opening book value. The depreciation charge in the first year is $720. So at the end of year 1, the book value is $1,080. In year 2, the depreciation is 40% of the book value, which is $432. And in year 3, the depreciation is $259.20. As you can see, declining balance results in a higher depreciation expense in the early years and a smaller charge in the later years. Both straight line and declining balance are common methods of depreciation. Check with your advisor which method is most suitable for your business, and depending on your country, your tax authority may have some guidance as well. Let's see how to run depreciation in Xero. From the Accounting tab, go to Fixed Assets. Whenever you enter a bill or a spend money transaction and allocate it to a fixed asset account, such as motor vehicles, computer equipment or office equipment, Xero creates a draft fixed asset. When someone with the advisor permission registers the asset, it moves from the draft to the Registered tab. That means it's now included in the Fixed Asset Register. Let's see our registered assets. There's an LCD display, a photocopier, and a delivery van. Let's click into the photocopier for a closer look. We can see the asset details. And then there's a book value section. We haven't run depreciation yet, so there's no depreciation start date. The depreciation method comes from the Fixed Asset Settings area. I've chosen the declining balance method for fixed assets with the asset type Office Equipment. The averaging method is actual days. This means Xero will work out the depreciation each month based on the number of days we own the asset, and the rate is 40%. At the top, click the Value tab to see details of the book value. We purchased the asset for $12,000. There's no depreciation yet, so its book value is still $12,000. Let's run depreciation. Click here to return to fixed assets. Assets need to be registered before Xero can calculate depreciation on them. We'll look at registering fixed assets in another video. For now, we'll just focus on these 3 registered assets. Click Run Depreciation. Choose the period you want to depreciate the assets for. You can do this every month. This is great if you regularly run management reports. Or you might choose to run depreciation once a year. If you've got an accountant, this is something that they might do when they prepare your annual financial statements. So have a chat with them if you're not sure. Here in the demo company, there are no assets to depreciate for this period. That's because all our registered assets were purchased in November and December 2023. So let's run depreciation up to the end of December. Before you click Confirm, check that things look right. Xero shows the amount of depreciation that will be allocated to the depreciation account in the profit and loss and the accumulated depreciation account in the balance sheet. It looks okay to me, so I'll click Confirm. Great, Xero has run depreciation up to the end of December. Let's have a look at those registered fixed assets again. Notice the book value has been updated. Let's click into the photocopier for a closer look. The cost doesn't change, that's $12,000. The value, or book value, is $11,710.68. That's because $289.32 has been written off so far. For this type of asset, the depreciation rate is 40% per year, declining balance, based on the number of days we own the asset each month. The photocopier was purchased on the 10th of December, so we own the asset for 22 days in December. Depreciation is calculated as follows. Book value of $12,000 times 40% times 22 days over 365. So that's depreciation of $289.32. And Xero shows you this in the Summary tab. Scroll down and click Show All. And here you can see each month's depreciation charge. We've only got 1 month so far for the photocopier, that's December, and you can click to view the journal. Hope you found the video useful. Check out my channel for loads more videos for you to learn about Xero. Thanks for watching.